Welcome to the Mastermind, everyone, today. Today we have Richard Wilson, president and founder of Family Office Club, who will be giving a presentation on how to close deals and influence investors and his methods to close deals. And then we have Badri on our session today as well, and he's going to go through dealing with investor objections. So it's a good combo today, how to close deals and influence people, and then also talk about, well, how do you deal with, commonly asked objections as well from your investors. So I think it'll be a great presentation today. So without further ado, I'll pass it over to Richard. Please, give your little intro for those who are just meeting you for the first time, and I'll pass it off to you.
Sure. Yeah. My name is Richard C. Wilson. I started an investor club in 2007. I've been running that now for 17 years, and we've hosted over 275 live events. We have a 20-person full-time team helping us run the investor club. We have about 7,500 investors registered with the club. But before I even started the business, I started studying the science of influence and persuasion. And it was through studying that we really launched our investor club, scaled our investor club. And if it wasn't for the influence and persuasion strategies I'm about to share with you today, I think our business would be a fourth of the size, or maybe we would not have survived. We maybe would have gone out of business. And so the strategies we share here, there's just about 20 slides. They've made us millions of dollars. And I hope that all of you get a ton of value out of sharing this. So I'll move pretty quick through these, but feel free just to stop me if people have questions. Happy for you to interrupt me and clarify a point, or you can emphasize something. But this is what's worked for us in the investor space. So I'll share my slide here. Probably take a second to pop up. There we go. So let me know if anyone has trouble seeing it. But this is about how to influence investors, how to win deals. This is my thesis. After I had my MBA, I was living in Boston raising capital, and I studied influence and persuasion through the Harvard ALM division. And I was taking all these psychology courses, and I was the only business person. Everybody else was a psychologist or a psychiatrist. And I was like the evil business person trying to figure out how to use this stuff in the real world, besides therapy, obviously. And you can see at the bottom of this page that part of my thesis was basically on Robert Chelini's influence principles. So that's kind of the foundation for all this. And I started learning about all of this back in 2007, and my thesis was in 2009. So it's been quite a while studying influence. But what is influence? It's basically, how do you get people to say yes to you? How do you convince your wife to go to the sushi place you want to go to instead of steak? How do you convince your kids to go to bed on time? How do you convince somebody to invest in your fund? And importantly, the academic field only approves scientifically proven methods of influence. So there might be some things that we all know work in the sales industry or the sales world, but the study of influence and persuasion is really saying what is scientifically proven to work over and over and over again across a wide variety of people. It pretty much almost always works, or it gives you a better chance of working. And so it used to be that someone could claim to be an expert on a lot of different topics, right? Look at Leonardo da Vinci, or and somebody who lived in the 1800s, John Stuart Mill. He is the last person ever to claim to know everything about everything. And that's such a ridiculous claim nowadays. No one would ever claim that, right? Like Elon Musk doesn't say, I know everything about rockets, because no one person does, right? And so the amount of cognitive overload is greater every year. It used to be that knowledge doubled every 15 years. Now knowledge doubles, last time I heard, it was every 2 years. It's probably even faster, who knows? The other way to say it is that there's over 400,000 scientific journals published every year. No one person knows everything in any one scientific journal. So there's no way to be an expert on all the stuff being thrown at you. And if you're an investor, you are very busy. You have dozens or hundreds of employees, perhaps. You probably get dozens of K1s, have dozens of LLCs. The amount of information coming at you, if you are a founder who's very successful or an investor, is a lot, right? And so if I recommend a book to you right now, Are you going to go to Goodreads and read 19 book reviews, ask on social media who's read that book, ask your best friends, do research on Google? No, you're either going to say, oh, that book sounds good, look on Amazon, it's got a good review, buy the book, or you're going to move on with your life and not even write down the name of it, right? You have to act very quickly. The busier you are, the more you have to rely upon shortcuts. Like, do I trust this person who told me to do something? Do I trust this review online? And you make a very quick decision. The busier someone gets, the faster, the more that influence and persuasion principles matter, because you have to rely upon shortcuts to survive the day. You can't investigate every little decision you make, or you won't get anything done, right? So that's the basis of influence. The reason you want to study it is that, first of all, in the investment industry, almost nobody talks about Robert Chelini and influence and persuasion. Also, every time you write an email, you're trying to get someone to respond to you or get on the phone call. Every time you write a one-pager, which hopefully you have and not just a pitch deck, you're trying to get someone to review your pitch deck or get on a call with you. The whole point of any piece of investment marketing materials is to gain interest, gain traction, get a meeting, move them to the next step forward. And so if you know these strategies, which you can literally study your whole life and always get better at, it's just going to make you more effective at communications. This is just an example of how many different pieces of materials can be dialed in, from your one-liner, the name of your company, etc. Could all be done in a way that's more influential than it is right now. It could always be improved. So I was lucky enough, after studying Robert Chelini for the last 15 plus years, last week I got to interview Dr. Chelini for the first time, which was pretty cool. His team had reached out to us just by chance because they found we were an investor club and they were raising capital for one of their training programs. And I said, oh, I'm like a huge fan. I'd love to interview Dr. Chelini and put it out on our YouTube channel. So I was able to do a one-on-one exclusive interview with Chelini. He is basically the foundational expert, the preeminent expert of the whole field of influence and persuasion. Many of you may have read his book. He's sold over 7 million copies in 44 countries of his book called Influence, The Psychology of Persuasion. And he has 6 principles in there, and I mentioned in a couple minutes. But I got to ask him a lot of really pointed questions I'd always wondered about influence and persuasion, straight from kind of the godfather of the space himself, which was super cool. And so one question I asked him was, like, after studying this for so long, like, what is the master key to influence? Like, what is like the one thing that if Badri's group here from A-Vester is watching this webinar, they don't remember another thing that I said the whole webinar, what's the one thing they should for sure do? And Chelini said that it is to have an ethical reputation. He said, if you do not have an ethical reputation, nothing else you say or do matters. And I had never talked to Chelini before, but at all of our events, I start out telling people, it's not the person with the best IRR written on their paper. It's not the person promising the most high, ridiculous returns that's going to win the day here in our investor club. It's a person that builds the highest trust, the highest conviction, builds the best relationship. People want to invest with the best people with a compelling, unique strategy, not someone who promises the highest returns. That's sometimes what new people to the space think. So I loved his answer. It totally makes sense. And in all of Chelini's teachings, he says it's about ethical influence and persuasion, because otherwise you look like a used car salesman and it backfires and nobody wants to do any business with you because you look manipulative or you're faking something to have in common with someone. So I just thought, having an ethical reputation was a really interesting takeaway from him, and worth mentioning here for you guys today. I also asked him 2 other really critical questions that I thought were, $100,000 insights. I said, what is going to make the difference in the world of artificial intelligence and technology and deep fake media? And you can't even believe your own eyes anymore, whether it's a picture or a video, doesn't matter. It could just be fake easily, right? And so in that world, what's going to make the difference? And there are scientific studies done over and over again that show, not just in the investment industry, but just in sales in general, and this is not in the world of AI, this is before you couldn't believe anything that you see, that 16 times, people are 16 times more likely to move forward in a transaction with you if they've met you in person and they heard the pitch in person. Just imagine if you're going to buy a hamburger through Uber Eats, or if you're going to get married, which one do you think is going to hold so much weight that you may want to meet in person with that person who you're about to marry or sell you that hamburger? Probably if you're going to get married to someone, you'd love to meet them in person first, right? So my point of that is that the more... What was that?
Hamburger. Scott, you got to know who's cooking that burger.
Yeah, it depends on how much of a burger connoisseur you are, I guess. Yeah. So basically, it's like the heavier weight the decision, obviously, the more you're going to want to meet the person in person, right? I mean, like, it's just common sense. I don't need a scientific study to tell me that. For all of us founders, we know that. But also, in a world where everything could be fake, probably want to meet in person. So my thinking is that in the investment world, I don't have a scientific study to show it, but I would guess it's 20 times more powerful or 50 times more powerful to meet in person. So we are going to continue. We've got 16.5 million social media group members and followers behind our brand, but we're going to keep hosting in-person events for as long as we possibly can for the foreseeable future, because we think it's the combination of having a big digital reach, but meeting in person, which is super powerful. And Badri's been to some of our events, and it just makes a huge difference meeting in person. So when I was back in Oregon for Christmas last year, we got a hemp milk latte with Badri and got to meet him in person, and just wanted to, actually get to know him as a human being. And I think that's going to keep on becoming more and more important. So that was interesting to hear from him. The other thing is, I said, if you're approaching ultra wealthy families, centimillionaires, billionaires, the busiest people on planet Earth, like heads of state, etc., what can you do to get a response from investors or catch their attention? And Chelini said that they've shown that people who are very wealthy are very successful, and they believe in themselves. They have conviction, and they rely upon their own judgment because they've learned they're pretty good at making decisions, and that's how they became successful. And so looking at what they've done before and being consistent with that, and looking at their actions and saying, okay, they always like to structure deals like this, or they always like to invest this amount and then a higher amount, or anything you can find about types of deals they've done, and then explain what you're doing in a way that's very much in line with what they've done before, then that would be something that they are much more likely to be influenced by, because they trust their own counsel. They are still influenced by the counsel of people that they see as authorities, but not as much as someone who has no idea what's going on planet Earth and doesn't have success yet. They trust their own counsel more than the average person. So those are just some interesting questions I got to ask Chelini directly. That, I've been presenting on this stuff for over a decade at our events, but I never could quote a person directly exclusively. It's just a picture of people meeting in person at one of our investor club events. We host 16 events in person each year, masterminds as well as investor summits. And our next investor summit, we have 4 billionaires on stage and 120 speakers total. This is one of my 2 favorite books from Chelini. It's called Persuasion. And essentially in this book, he's providing over 50 examples of ways that you can shine a spotlight on something. So somebody's prefrontal cortex puts a outsized importance on one fact or area, and then when you're bringing up your presentation later, it's going to influence their perception of it. And so, for example, if somebody does do deals in a certain way as an investor typically, and you learned through someone or somehow on past investments somebody has made, then talking to them when you're first getting to know them and bringing up like, oh, I saw you've done 3 deals in manufacturing before, or in whatever niche you're in, and bringing that up and how those were structured, and just confirming that you got your facts right, but also just bringing it to the front of their head. Now, if you bring up your deal that's structured in a similar way, they're going to link those 2 together even faster than they normally would. Another example of persuasion is if you add big value to someone and it's going to help them make $500,000, you don't say, well, we're not going to split that. I'm not taking 250,000 of the 500,000. Our fee for doing that is actually only 25,000. And then saying 500,000 first, and then 250, and then 25,000 makes the 25,000 seem much, much smaller. And that's just another form of persuasion, is influencing what's coming next by saying something immediately before it that has the brain, hyper concentrate on a certain area, fact, or element. Another thing that boosts credibility and influence is pointing out what's not perfect. If you pretend like there's no chinks in the armor, well, then someone's going to look for one and they're going to think you're trying to deceive them. And so it's scientifically proven that there's always a negative. Like in our investor club, we're not doing one-on-one matchmaking, and we're not doing, we're not doing cap intros and raising all the money for you. If we did, we'd be charging $30,000 per event, not, 3 to 7K, for 6 months or a year membership, right? And so the benefit of that is we don't have to charge $30,000 per event, but we also are not like your capital raiser full-time or your broker dealer, placement agent. So, but admitting what the negative is up front allows people to not only understand it better, and full disclosure is always best in the investment world, but it just gains trust. Because you're not acting like you're perfect. When someone says they have no competition, there's no downside, there's no risk to this deal, it's the best deal you've ever seen, like people just are kind of like, all right, let's just end the conversation. I need to go take a phone call or something, right? That's just, investors smell amateur hour when they hear that. They just blatantly don't trust it. So this is the book I mentioned earlier. It's kind of the foundational book on influence. If you haven't read this, definitely encourage you to pick it up on Audible. You can see the 6 principles here on the screen: authority, commitment, reciprocation, similarity, scarcity, and social proof. Some of these are pretty obvious and been talked about many times, so you're probably familiar with scarcity or social proof. But the more you can build yourself up as an authority that people look up to, the more powerful subconsciously what you say, like it has a heavier weight to it. They've shown that in different environments, different people have levels of authority, such as speaking on stage at a conference, for example. And they've shown, for example, in the world of medicine, if you're in a hospital wearing a white doctor's kind of lab coat looking attire, people treat you differently. And they've even shown that trained and experienced licensed nurses told by someone who's not a doctor, but they're in a hospital with a doctor's lab coat on, and they've never worked in that hospital before, will walk in and tell a nurse to inject 2 chemicals that every nurse should know are lethal into a patient. And there'll just be a saline solution inside the needles. And more often than not, the doctor can get the nurse to inject the patient with what would be a lethal substance simply because he's wearing doctor's clothing. They don't recognize the doctor. They have never met them before. They know it's lethal, and they still do exactly what the doctor says, right? And so that's just one example of authority. There are hundreds of scientific studies behind each of these scientific influence principles mentioned here. And number 2 on commitment is related to what we said about getting the ultra wealthy who believe in their own counsel to do business with you or to work with you. If you do things that are in line with how they operate, then you're more likely to gain their approval and gain momentum. I'll stop right there to see if there's any questions. I've got some more slides to go through, but anything that I moved through in these last couple slides that somebody would like to ask about?
No, I'm familiar with the books, and
Okay.
agree with you 100% that these are great principles to follow. It's very, very difficult. At least for me, I'm like a mule. You got to hit me over the head many times. But, that's the power of going back and rereading it and quite frankly, practicing it. If you don't practice it, it's really hard to make it part of your everyday being when you're speaking to other people.
Yeah, for sure. And one thing that Chelini said, because I told him my favorite influence principle is a combination of scarcity and authority, and try to make myself such an authority on a niche topic that I'm a scarce resource, and they don't know of any other authorities more in depth of an expert on like how to start a family office or something of that nature. And what's interesting about what you just said and how Chelini responded to me, I thought he was going to be like, oh yeah, that's really smart, Richard, good idea. Or like, here's another one that's a good combination. Instead, he said you should not have a favorite influence principle of these. He said you should just go into an environment and see what objects are naturally in that environment and not fabricate or push a scheme on every situation you go to. Otherwise, it's like you're running around with a hammer trying to find nails. He said instead you should just enter a conversation and then see, oh, commitment, consistency. Oh, there's some natural scarcity because I only have room for 4 more investors. So I might as well mention I only have room for 4 more investors. And that's a natural scarcity, not a fabricated fake scarcity. And he said, that way you're being genuine and you just use the one that's strongest in your environment. If you're going water skiing, a pickaxe for the mountains might not be the best, right? That was his response, which I thought was kind of helpful because also related to what you said, you can study just one of these principles. I became more obsessed with authority and scarcity combined for a long time. And the rabbit hole goes so deep, right? It's like, you can just there's so much to learn about just even one of these, Any other questions or comments on these?
No, I like your point of don't try to force fit something, right? I mean, I think that's a very important point. I mean, I think you need to understand the environment you're in. And if somebody doesn't respond to high pressure things, trying to push a scarcity thing might not be the right way to go. Even in the sales thing, right? I mean, sometimes, okay, you have 24 hours to sign this might work, but sometimes that might actually backfire. Hey, this guy is very pushy. Right. Just to give an example, we unfortunately had to replace our heat pump. Worse things can happen. And two people, one guy said, hey, this is the price. If you want to do it, you can. I can't do it for a month and a half. He was genuine about it. And then this other guy comes and he gives me three prices. If you do it within 24 hours, this is the price. If you do it right now, this is the price. And if you do it within 48 hours, this. My wife completely said, we're not working with that guy. I don't care how good his company is, so.
Yeah, for sure. When there's a fake emergency, we were trying to get this domain name for one of our hospitality clients and we wanted it. But then they tried to create this fake thing where you have to buy it right now. And I was traveling that day to Bali or something. And I was like, forget these guys. I don't even want to get it from them because they're so weird about it. So I think that's a really good point. Any other comments or questions from anyone?
Yeah, I have a question. And the question is that I just came in late and I want to know what of these services that you're talking about are provided to us as new members of Investor. What do you provide us?
Yeah, sure. Well, we have 1,000 videos that are free on our YouTube channel. It's called Centimillionaire Strategies. And under playlist on our YouTube channel is our most valuable content because we have a $100 million Rainmaker series. It's like a mini series on there. And each video is just 4 to 7 minutes long. And we have 17 videos providing over 30 different strategies on how to raise a lot of capital. And it's just based on what we've found works while running our investor club the last 17 years. And so that's the number one best free resource to go to. We also have a free book on raising capital at capitalraising.com. Those are the two best kind of free resources. And then we try to jump on here once a quarter to do a webinar just on some of the stuff we've learned while running our investor club and what works in convincing investors to work with us or come to our events or conduct transactions with us. Because we'll do things like we sourced $500 million worth of Marriott hotels for a hospitality REIT that's going public. But we've also sourced 19 deals for a billionaire. But we've also sourced capital and sourced investors for medical practice deals, real estate deals, to buy assets like billionaires.com or commercialrealestate.com. So we've been on the side of sourcing deals, but also helping families start their family offices or raise capital. So that's kind of how we apply this to our world. It's kind of on both sides of the coin.
In case you didn't see the chat window, somebody asked, what is the YouTube channel name? Corey put in the link, including the search query. Thank you.
Oh, awesome. Yeah, thank you. Yeah, just Centimillionaire Strategies. Was there one more question? No? Okay. Here is the short code to the YouTube link right there. There we go. All right, let me get my PowerPoint brought back up here. Here we go. Okay, so in psychology of influence, they've just shown that the way you do something is the way you're going to do it over and over again. Like if you wake up and the first thing you do is brush your teeth and then shave, or brush your teeth and make a coffee, that's typically the way you're always going to do things. We're creatures of habit. And so recognizing that is important to the key to influence, in my opinion. This was not Robert Chelini's opinion, who knows 100 times more than I do because he's been studying influence for 45 years. So what do I know? But what I've found for myself is that I become much more influential the more I can first influence myself. I've had this saying that nobody will take your investment offering more serious than you take it. So if you don't bother to get a domain name, you don't bother to create a website, you don't bother to have a professional logo, then like, why should someone else bother to take it seriously if you're not? But also, the more that you can influence yourself and be aligned, your words being aligned with your actions, et cetera, then I think the better things go for you. And so, the more you can be disciplined and do the things that you know you need to do, the more you're going to rise above others that know they should be doing some things, but they just don't do them. They just don't get them done consistently. And I think that's one of the things that family offices, like ultra wealthy investors, really look for, is consistency, because they know to be a successful founder and create the wealth that they have, that they not only have to be hardworking, but they have to stick at things and have some grit and consistency to their own actions. So that's part of having a track record and part of looking for people that already have momentum and success in their model. They have shown through many studies that the relationship you have with an investor is more than 2 times as likely to determine whether they invest with you as the features of your fund. So somebody else could be offering higher returns, better collateral, their materials look better, but because you have a better relationship, you get the deal done. Another thing that I think is really interesting is we have had 100 people interviewed within Family Office Club, our investor club, that have all raised $100 million or more. So if you sat down and had a cup of coffee with 100 people who have all raised 100 million plus, we've recorded those 10-minute talks, those interviews and talks within our member portal. And we have found that even people who have raised, like Chip Perkins, who spoke at our mastermind this summer, he's raised $7 billion. And all he does is work as a placement agent to raise capital for people. He has the best CRM, the best team. He's like Chelini, but for capital raising as a placement agent, right? And so what's interesting is that he said many times during the fireside chat I did with him that even now he has to go and talk to 200 to 300 investors to find 10 who will invest, or talk to 1,000 to find 100 that will invest. And he says it's still not easy after doing it for 25 years. So I think it's good for people on here to hear that. So they're like, why is this so hard to raise capital? Why is it so hard to find an investor? Like, well, it's not always hard. Sometimes you have something and the money pours in because it's a very hot area, hot topic, and everything, the stars align. But most people have a really hard time raising capital, and it takes a lot of work, and you might get it done, but it might be harder than you thought, right? So I think it's just good for people to hear, and the relationship matters a lot. In terms of how we've evolved and positioning our authority, the first book I wrote is on the left here. It's fuzzy. My head's cut off. It's obviously at a conference. Bank of America says there's 6,000 Richard C. Wilsons just at Bank of America. And I forgot, I didn't have my middle initial on the book cover. So, you can never find me on Google otherwise. And so the next time I wrote a book is for Wiley. The cover is more professional. I use my middle initial. I actually had a subtitle to the book. And then we've evolved to doing books that are very clear on who they're targeting, have a subtitle, a better design, have a URL in the front. And just to position yourself as more of an authority, you want to make sure everything you produce is appealing to somebody very specifically and is really dialed into that person and crisp and institutional quality. That will grow your level of authority in your space. Brian Burke is a friend of mine who helped us acquire commercialrealestate.com. It's a domain name that we own. And he came to some of our workshops and masterminds and heard about how I've written 13 books, and books have helped us gain investor traction and investor clients. And it's not so much about the book, it's more about just doing thought leadership in general. But he decided to put a book together, and he was able to raise a record, $25 million in just 4 weeks. And he reached out and thanked me because he said the book was central to that. And again, it's not a prescription to go write a book. It's just that the influence principle of reciprocation means if you give value to someone, they're more likely to want to do something to help you back. And whether that's a YouTube mini series or a PDF book, a white paper, a benchmark survey, a series of interviews you do on a topic, whatever it is, if you're adding genuine value to someone, they're more likely to want to meet with you and add value back. And that's what Brian found. And he had a record capital raise because of that. Tony Robbins is an example of a scarce authority, at least in some people's eyes, at least in the late 90s, early 2000s. And if not now, he's seen as an authority on self-improvement and leadership. There's not many self-improvement gurus that have self-improved themselves so much that they became a billionaire. That's pretty unique. And so his level of reach and notoriety just grew to a point of, whether you like him or not, like is kind of a preeminent authority in that niche. So he's an example of a scarce authority. And Jay Abraham was introduced to me through Evan Pagan, one of my early mentors. And his whole theory on authority is really to have preeminence. Cialdini is referred to as the foundational expert on influence. That's the ultimate position of authority. And that's what Jay Abraham, who is thought of as one of the smartest business development and marketing minds alive today, that's what he really talks about more than anything else, is trying to get to a place of preeminence in your niche. And you might say like, oh man, I'm so far off from that. I'm just trying to do this. I'm just trying to acquire 5 plumbing companies, or I was trying to acquire first 3 hotels, whatever it is. But you could be number one in your niche and you carve out a small sandbox and say, well, we are acquiring dry cleaners only in Houston, and we want to have more dry cleaners than anyone else in Houston. And at least in that sub niche, maybe you're more well connected than anyone else. So you can always niche things down. When I talked earlier about influencing yourself and having an ethical reputation and how to be consistent with where an investor has acted before, one way to get to those places is to ask more questions. A lot of times you get access to an investor and they say, oh great, when do you have time to go through the pitch deck? You get into the pitch deck or the meeting, you go through all the slides, you say, oh, do you have any questions? The other way to do it, which is much more effective, is to ask questions for 60% of the time and then tell the part of the pitch that they actually care about. Then emphasize the thing which is very consistent with their past actions. And you'll learn way faster than if you just pitch the whole time and they say, oh no, I don't think I have any questions. Let me just follow up next week if I do. And then nothing really happens, right? So spend your time with investors asking a lot of questions. Stephen Covey says that to be influential, you first have to be influenceable. First, you need to take in a bunch of information, and then you can be influential after you've allowed yourself to be influenced. Is there any questions about that? If not, I'll keep going. Just have a couple slides left and I'll wrap up here. Covey mentioned, related to listening, that most people are just horrible listeners. You're lucky in school if they teach you anything about public speaking. Usually they teach you absolutely nothing, even in an MBA, about listening, right? And it's more important to listen than it is to speak. And Stephen Covey talks about how most people speak at 150 words per minute, but they can listen at 500 words per minute. That's why a lot of us listen to Audible at 2 times or 3.5 times speed and get through books fast, because we can listen way faster than most people talk. So most people get bored while you're talking because they can hear at a much faster rate, right? And so that's something just to keep in mind and be thoughtful of, so that when an investor is talking, take notes and really try to empathize with their position and not ignore what they're saying and just latch on to the first idea that comes into your head. And that's something that takes some practice. But I find that most people are just pretty bad at listening, and most people are not used to others actually listening and following up on exactly what they said to follow up with. And some of my best relationships are with $100 million net worth families, and I only touch base with them twice a year when I have something that's exactly what they told me they wanted. And I'm not following up all the time, just get on another call. And they're like, why do we need another call? Like, I don't know. There's not something really relevant, right? They're super busy, just like all of us are. Gary Vaynerchuk has grew 3 companies to 60 million in revenue. And he says he is a counterpuncher in a world of jabbers. He's a big boxing fan. And he said other people come out jabbing and pitching. And he just listens, and then waits for that opening to add value and really close someone on exactly what they want. So some of the things we covered today in the presentation was persuasion, planting things, reminding people of things, and putting it in the prefrontal cortex so that what you're doing next has kind of a light shown on it and it's extra influential. Becoming a scarce authority, learning how to influence yourself, and coming up with many strategies to make yourself more disciplined, more focused. I have a 1-pager that I read every day with my monthly, quarterly, annual goals and about 50 statements that I know I have to abide by in my life so that things go better. And I review that every day so that I can influence myself to be more influential to others and just be a higher level version of myself, hopefully. Meet and close people in person. It's at least 16 times as effective. I think it's probably more like 30 or 50 times as effective. Long-term commitment equals conviction. Show you're committed to your craft and what you're doing, and only act in ways that nobody would do unless they were long-term committed, and that's going to earn trust faster. Open with a mystery or open a loop in an investor's mind, and they're going to want to close that loop and hear the rest of your pitch and figure out what's that one thing you learned that saved you $1 million, but save that for the end of your presentation. That's a way to hook a very busy, wealthy founder. And then the last point is just try to be the #1 resource for a specific type of investor. Like maybe you're the most informed person on tax strategies they know, or on solar, or on whatever your niche is, right? Like for Badri, it's a customized fund approach, right? That's like a unique position in the marketplace. And so he's cut out a clear spot. Sanjay and him have cut out this clear position in the market with A-vestor that's not like 1,000 other options out there related to funds. So that's it for today. Our website for our investor club is just familyoffices.com. You can see our event schedule there. Our 650 person event is coming up December 10th to 12th in Miami. It's in Key Biscayne, just about 15 minutes from downtown Miami. And appreciate everyone's attention. Happy to answer any questions that anybody might have here.
Thank you.
Oh, go ahead.
Oh, go ahead, Richard.
I was just going to say that one thing that's interesting is just to look at meetings you have coming up, or looking at your pitch deck and your one-liner and your one-pager, and just thinking, what thought leadership could I put out to enact a sense of reciprocation, and investors would get so much value from that infographic or that checklist that they're going to want to talk to me and get value from me. Like, what can I do? So my first interaction with an investor is giving them value instead of pitching, Bobby, were you going to say something?
Sorry, let me unmute. Hey, Richard, great presentation. Nice to meet you.
Thanks.
Want to run a question by you. I'm a big believer in meeting in person, and I think it's a great way to connect with like-minded people and all that. My situation is a little different now. I'm not in the States anymore, where most of my investors are. So sure. 9 to 10 months out of the year, I'm not in the country. So what is the next best alternative for me to connect with people?
Where are you the other 9 or 10 months? Like what country are you in?
Bouncing between South America and Asia.
Okay. So obviously Asia has tons of new wealth being created there. So that's partially why I'm living in Hawaii, and we're starting to host 4 events a year in Singapore, and then Sydney, Australia next after that. We think a lot of the future wealth creation will come from there. So that's one thing just to keep in mind, is like maybe there's one city in Asia that you focus on tapping into, like networks wise. For when you do go to the US, then, I would probably try to concentrate your energy just on 2 things, like where you're buying assets. Like let's say you're buying, multifamily properties in Nebraska or something, or maybe it's Texas, then I would focus your capital raising efforts on just 1 or 2 cities within the United States, right where your assets are that you're acquiring. Because then even if you're not there, the investor could go visit the property with one of your team members. Or when you're in town and doing due diligence on properties in Texas or Nebraska, you could meet with them easily. So there could be a lot of synergies in doing that. So that'd be the first thing, is the geographical focus. But then depending on the niche you're in, like let's say you're buying dry cleaners or plumbing companies, et cetera, I would also then go niche on that demographic and find people who have had exits in that space, and people who have sold their plumbing companies are amazing prospects to invest in your plumbing fund, because now you don't have to explain to them plumbing, like they get it. And might be hard to build that database. Of course, there's some challenges to that, but with some like offshore data researchers, you could probably put some together. So the first idea is geographical focus, where it's near the assets you're buying. And the second is like, if it's a litigation law hedge fund, maybe pitch law firm partners. They might source you a deal. Same with a plumber. Their friend might be selling their plumbing company, and you don't have to teach them the ABCs of law and litigation funding.
Makes sense. Thank you, Richard.
Sure. Yeah. Corey?
Yeah, thanks. Great presentation. And I arrived just a little bit late, but if so, sorry if you already answered this. But what does the initial reach out look like to engage? I think that's something I'm testing right now and in figuring out. And obviously, and how different is it from going to a family office or a very high net worth individual to like a small balance investor? Like that initial, with given that you don't have a brand, it's not really built out. They haven't been on a campaign or a newsletter. I'm building out right now, but that's just for the short term.
Yeah, sure. So after 17 years, I'm still evolving what we do. I think like it's a constant evolution is one part of the answer. The other is that on the hardest to reach people in the world, cold emails do work. And we have proof of that because we've interviewed 42 billionaires and 30 of those were done through cold email approaches. With Mark Cuban, it took 14 emails to get him to reply to us. And with a billionaire like Mark, we'll space it out by 2 or 3 months. So we're not bothering him 3 times a day. For a high net worth individual, maybe I'd approach every 10 to 20 days, but through different mediums, different subject lines. The worst thing is to send a long email. Someone has to read an essay to figure out what you're doing. So concise is always best. Adding value to them is the ultimate way. So like when I moved to Arizona, before I came to Hawaii, the first week I was there, I met a $100 million net worth family that I messaged cold on LinkedIn because I was having my car serviced and they had a subscription plan to their service company. I said, oh, that's a really smart model. I wonder like if I could invest with them or something. And I looked at their website and they had like 18 locations. So like, whoa, these guys are making a lot of money. And I reached out and I didn't pitch them on me. Instead, I said, I have an investment structure that assuming you're raising capital for each of these locations as you open them, you'd be able to raise the money, pay off investors and give them zero equity. You keep all the equity and give them a good return and they go on their way using my gross revenue royalty structures. And would you like to have a cup of coffee and meet since I'm local? And it was literally like a sentence and a half. And I emailed the 2 founders through LinkedIn. They didn't know I had messaged both of them. They both replied the same day that they wanted to meet. And I found out they'd already sold their company for 180 million to Goldman Sachs. So like that, if you can get billionaires to reply and centimillionaires to reply, then it's going to be easier to get angel investor size or high net worth to reply. But adding value is the biggest thing. So like we'll go to a billionaire who's written a book and say, hey, can I buy 500 copies of your book and give it away at my conference? And really, okay, it's nice to give it away. I'm really just trying to get them to answer my 3 questions for billionaires.com so we can get to 100 billionaires interviewed. I really don't care about buying their book, but it's giving value to them first. And I just say like, hey, and it'd be really cool if you could answer these 3 questions as part of that. And like, that's really what I'm going for. But I offer to buy 500 copies of their book first. And that's worked with a few billionaires. But I don't have like the magical thing. Like with Mark Cuban, it's somewhat inappropriate, but I'll say it anyways. I don't think anyone would be too offended. But like with Mark Cuban on Shark Tank, he always says no balls, no babies, right? And so I did all these serious approaches. He completely ignored it. And then I said something about, I said like, no balls equals no babies, ? In the subject line. And then he actually replied to that email. So that's one time where sense of humor got him to actually reply. So I'm trying to use a sense of humor. I think that's probably the most inappropriate professional message I've ever sent to anybody, but like it's his own words, right? So he can't get offended by it. But concise, add value, say something unique, those are the top things I would use for reaching out. And 99% of people reaching out are pitching. They're not offering value at all. So like it has to be in their best interest to reply as if you're the most valuable email in their whole inbox for the whole day. Nobody else sent over something more valuable than what you just sent them,
Mm-hmm. Yeah. So like maybe if I could find this for you, would that be of interest to you? So like bringing value, like, can I bring you a deal? Can I go find this for you? Given that I think
that's possible value, but I think it's 10 times more valuable to say, I have this for you. Can I make the connection? I have a client for you.
Pitch, like actually having a deal. Because I found like a lot of the conversations I strike up, like the best ones I have is that because I have something to actually share.
Yeah. I mean, you have to be careful because like if you say I have this deal for you, it can still look like just a pitch, right? Yeah. If you said it could be not even related to your deal. Be like, oh, I have another $100 million family in the auto parts industry. Would you like that connection? Or I have a client for your manufacturing business over here. Could I help you with that? Or I have this for this one entity I know you own. Because if you say, I have this amazing hedge fund, do you want me to do the favor of allowing you to invest in it? They're going to feel like it's just like a sales pitch, right? It's like a thinly veiled sales pitch. And these are the most cynical, busiest, skeptical people on planet Earth, and they get 1,000 pitches a day. And we have sometimes people that like will get like a list of leads or like investors from us. And it's really interesting dynamic because they'll say, man, I emailed like 100 investors and no one emailed me back. This list is garbage. And like in their mind, they don't even conceive that maybe it's the message you're sending them, and maybe no one owes you a reply. Like maybe your email sucks, right? Maybe it's just average, and no one owes you a reply to your random email, right? And so that's like the harsh reality is like everyone's busy, everyone gets pitched a ton, so it has to be really unique. And one family office on stage 2 weeks ago who manages $1 billion, he's allocated to 200 investment managers. He says, just tell me why it's unique, why it's compelling, what's your competitive value add edge, and link to some of your materials. That's it, like 3 bullet points. I don't need an essay, you know. And so I know it's like a long answer, but I think like what you asked is super important, because if you don't get traction up front, then nothing else matters really, right?
Yeah, and it's a very nuanced topic. What I'm hearing is that you need to really research like that family office, what appeals to them, try to do some like research. Maybe there's something personal attribute that can be bled in there. They're an author, they're trying to get their book out there, live their legacy, appeal to that, and then kind of bring it in without it feeling like a pitch. So
yeah, ideally, right? I mean, if what you're doing is so unique and you can say it so well in a single sentence that it pierces through their inbox and hits them between the eyes, then you're going to make a lot of money and raise a ton of money, and like good for you. But it's hard to find something that magical that nobody else is offering them. So just, you know, we're always trying to improve what we do to have a better hit rate. And that's what we've learned, you know, to date. And you know, we do tons over email. So if you ever have some breakthrough idea on that, I'm definitely happy just to trade notes with you offline. But like since we started our business, my Gmail account, I've sent 199,000 emails of sent emails from my Gmail. So like we email like a ton, and we're still learning. So always happy to trade notes.
Beautiful. Thank you. Yeah, I'll take a look at it.
Cool. Any other last one question, and then
yeah, I don't have a question, Richard, but I just wanted to restate what the conversation just was. So what I'm hearing is you need to offer something that benefits them, that doesn't necessarily benefit you. So not something that's reciprocally beneficial, something that as an example, using the family office, instead of coming them with a deal, they don't need deals. They have 100 deals pitched to them every single day. So it doesn't matter how great your deal is. But if you have a high net worth individual who is exploring family office, and this is not a single family office, but a multi-family office, you may be able to bring them that high net worth individual and say, hey, I have someone else that would be interested in talking to you about joining your family office. That's something giving where you're not getting a direct benefit, but definitely could come back, you know, and open the doors to allow you to build that relationship.
Right. I mean, like one quick idea that anybody could apply is like, let's say you're talking to an investor and they don't feel like they're 100% equipped on how to evaluate other real estate sponsors or funds. You could say, here are the 15 questions you should ask every real estate sponsor before you allocate money. And here's a little checklist. Here's a little one-page infographic on navigating